Hello everybody, Steve Griffiths here, developer of the MTPredictor software program. Today I'd like to look at how yesterday, which was the 5th of February, unfolded, particularly on the YM. I want to do it on the YM because I want to show how it's important to not only just follow or to follow different time frames, but also to be aware of some of the more advanced techniques that we use in MTPredictor. So if we first look at yesterday on the YM, on the 3-minute YM, we look at the STF. If I change the colour there, you can see the STF was black stroke blue, therefore the larger degree trend was up, therefore you should only be looking for buy setups. So you should have considered this particular buy setup here and avoided that particular sell setup there. So if I zoom in a bit, let's have a look at this first buy setup here. This came in at around just before 11 o'clock. Excuse me. So let's place the analysis on and see what happened here. Well, as you can see, the market came in, took us into a long trade, and then came back out and stopped us out. This is where position sizing is so important, because you will have losing trades as a trader. This is unavoidable. It's all part of being a professional trader. But the trick is keeping the losses small. Here we use position sizing, which varies the number of lots, contracts or shares to keep your initial risk small and under control. In this example, less than 2% of a sample $20,000 account. We call this one risk unit. So here you would have had a losing trade, which would have been what we call a -1R loss. You'd have lost one risk unit. Now if you'd stayed on the 3-minute chart, the rest of the day you'd have had nothing. You'd have avoided this DP sell, because the STF was blue, and you'd have ended up with a -1R loss. However, if you now look at the 5-minute chart, whoops, just clears that analysis off, and I zoom in a bit, you can see that here was our trade, our first trade, also highlighted on the 5-minute chart at around 11:48, 11:50. But can you see how we got another buy setup a bit later, around 12:40? So that means you would have had a -1R loss on the first long trade from your 3-minute chart, but then along popped up another trade on your 5-minute chart, and if we place the analysis on here now, you can see that this trade was taken in. Again, position sizing keeps our initial risk small under control, but this time the trade went up to our first target, which would have been hit just there. STF is weak, i.e. less than our strength band, so therefore you would have made a plus 2.9R profit as that target is hit. Now can you see how position sizing helps? Because this profit at 2.9R was approximately 2.9 times the initial risk. So remember, we made a -1R loss on our first trade on our 3-minute chart, so plus 2.9R here more than made up for our -1R loss and then put us in profit for the day. This is why when you have when you're running MTPredictor, be it on the new MTPredictor version 7.5 as I'm showing here, or NinjaTrader or our TradeStation ELDs, it's important to have your scanner running. And when you have your scanner running, I'll just put in the 5-minute charts here as well. Dead easy like that. You see, in they go. So therefore on each symbol you can know where you are, or on each time frame you can know when a setup is highlighted there and quickly and easily see these setups. So there's no real excuse to miss a setup on a different time frame if you have your scanner running as well, which is what you should do when you're following the markets. So therefore it was a good, clear everything off there, this was a good example, I thought, of showing how, even though we had a -1R loss on our 3-minute chart, that this was then more than made up for by our 2.1R profit on the 5-minute chart a little later. Now I want to go in and show you what advanced traders would have been looking at as well. So if I clear this off and I now go to the 15-minute chart, remember we put our DPs on our 15-minute chart to give us areas in advance. Now this is where the power of the software comes in, that our DPs here are in advance. In other words, they're leading indicators. So you would have placed the DP off this prior pivot, and you would have known in advance that this particular 15-minute resistance area was there waiting for you. So now if I go back to the 3-minute chart, can you see how the markets just rallied up here and actually came into our 15-minute larger degree resistance zone there? Now that was important because you knew it was large degree resistance. One other trade setup we do quite a lot of is what we call our VSA setup, in other words our volume spike analysis. Now this comes in on our volume bars here, and it's gives us highlighted red bars here. When are these important? Well, first of all, they're important when they come at bars that go through or breach prior highs and lows, particularly important highs or lows. So if I just put a high tag on this particular high here, which was the high of the day earlier on in the day, you can see there it is there. Now I zoom in a bit. Can you see how this particular bar here, which was at 1442, is our VSA spike bar? If you can see down there in the volume, is highlighted as red, and this bar broke the prior high and actually went up to new highs. Now normally when you get a bar that makes new highs and is on increased volume, most amateur traders would say that's buying and therefore they want to go long. However, as you can see here, that would have been a bad move because the market reversed quite sharply. But what we know is if the market then, the next bar, hits resistance, and in this case this was our resistance area here that we had on our chart in advance, so we knew that as the market was making new highs, there was a large degree resistance zone ready for it to bump into just above. So if we have a MTP coloured reversal bar, which we had here at 1445, a red bar that came on the bar after our VSA bar and actually came right at resistance, then we know that the actual high volume in this first bar was not buying, it was actually selling, and it was professional selling. In other words, the professionals were selling to the amateurs. That means there's a strong reversal coming. So how do we trade this? Well, normally we suggest for MTPredictor we look at the DPs off the prior swing into highs and lows. So that would be a DP off this particular pivot here. But as I've taught in the past, when you get a VSA setup, you shouldn't really be looking at the first target. If I put the risk reward on in and around this particular bar here, you can see the first target was only a risk reward of 1.2. We normally want one risk reward of 2 or greater. So you wouldn't be playing for this initial target. You'd look at the start of the entire sequence, which is the rally right up into the high here. Should have come back to our 1239 low, place a DP on off here, and this would have been your target. And if I drag the risk reward down, you can see that the target would have been a very healthy plus 3.7R profit. So in reality, this allowed you to catch the very high of the day here with our VSA setup, particularly as it bumped into large degree resistance, which would have been on your chart in advance, and the market then came down here, and it wasn't quite the low of the day because that was right on the open, but you caught a very nice trade as the decline came down in here. So looking back on the day as a whole, you would have had a -1R loss from your first TS3 buy setup here. You then should have moved over to your 5-minute chart because it was alerted in the scanner, and then got another a long trade off here, which we remember was plus 2.9R. You would have avoided this DP sell because the STF was blue and it wasn't at large degree resistance, so there was no reason to consider that one. Then the advanced traders among you would have noticed this high volume VSA spike. Again, this is highlighted in the scanner for you as well, particularly as it unfolded at large degree resistance, and that large degree resistance was on your chart ready and waiting for you, so there's no reason to know or to not know about that large degree resistance area. That could have then generated a nice short trade that had you short from the high of the day into the pretty much the low there for a lovely 3.7R. As the STF was strong at that particular point in time, you could have actually then trailed it into the close for plus 4.6R, but even if you'd come out at the first target, a nice plus 3.7R would have been a very good result. So overall, it should have been a very good day for MTPredictor users, particularly when you add in the different time frames and some of the more advanced techniques that we teach here at MTPredictor. So this is why we tell you to come into our training webinars to learn the more advanced techniques, because it allows you to uncover additional trade setups like these above and beyond the standard trade setups, which, as you've seen, will definitely help and add to your bottom line profits.